All right. Right now, we're just waiting on some people to log on. Um, let's just waiting for a few people to get on here. How is everybody doing? I hope everybody's doing fine. Hope everybody's doing okay. Um, just waiting, just waiting. All right, let's just get right into it. So September is historically the choppiest month for stocks, and that's our focus. Today, what I'm gonna do is just show you guys a simple beginner-friendly plan for getting through it, and show you what a typical September dip looks like. We're gonna go through a few articles, talk about why it happens, and how I'm setting up my own money, how much cash I'm keeping, and where I feel comfortable buying more, and what I would analyze and what would make me pause. After that, we'll talk about a few other things. There's an article on Google and why they're popping, even though a lot of the market is down. We'll talk about Netflix, how I'm going to be playing Netflix in the future. We'll look into some crypto stocks, some cryptocurrencies. But, you know, um, with all that said, let's just jump right into this. So let's get it. All right. So as of right now, according to Market Watch, this is the current live visual of the Dow, the S&P 500, the Nasdaq, the VIX, gold, oil. So if you look at the Dow is currently down. And like we said, yesterday the market was down substantially. Today we're kind of bouncing back. As you see, the Nasdaq is leading the rally right now. It's up 1.2%. And the VIX is something that I've been really looking at, the volatility index. Um, so just because the market is falling, that's not a trigger for me to automatically start buying anything. I want to see the VIX higher. Whenever I see the volatility index rise to the 20s, 30s, that's when I'm like anxious to buy stuff and I'm like looking for those opportunities. When the VIX is below 20, especially recently, that's not really an opportunity for me to like buy anything. When it drops below 16, when it's at like 13, 14, which it has been in the last few months, that is when I'm actually looking to sell stuff and I want to sell my cryptocurrencies, sell stocks, and that's what I'm looking at. Let's look at the crypto market. What is that doing today? So, my brother, I actually talked to him the other day, and he thought like Bitcoin was at like 60,000 still, and he's like, what it hit, and I told him it went to like 125,000 at one point, and he was like, what? Like he was like in shock. But yeah, Bitcoin is currently at 112,000. It's up 1.42% today. Ethereum is still looking very, very, very attractive. Anywhere under 4,500 at this point, I would just buy a little. That's what I've been doing. I've been dollar cost averaging into it. XRP is one that I'm looking at it, and every time it falls under 280 in the near term, that's where I'm a buyer. For Solana, Dogecoin, I'm not really touching it. For Cardano, that's one of the channel favorites. For Cardano, I'm actually looking to buy that right now under 80 cents. So anytime I see Cardano fall under 80 cents, I'm just diving in there. I'm buying a little bit. But let's get into the meat and potatoes of what we're going to go live with today. So this is one article we're going to look at. We're going to look at two articles, but this is one of them. So September, the market's most feared month, could be a golden opportunity. And we all know the saying, I say here all the time, when other people are fearful, that's when you need to be greedy. And when other people are greedy, that's when you need to be fearful. But one of the things we're going to look at is everybody being fearful? Is that why the market goes down in September? We're going to take a look at that. One of the charts here that we're going to look at is September has historically been the worst month for stocks. This is a 30-year period here on the left side of what September's look like. Compared to the rest of the month. So down here you see January, February, March, April, May, and then you see September here is highlighted in blue. It's down lower than the average. Close to it is August. But if you look on the right side for the 5 periods through 2022, not 2025 through 2022, I'm going to show you 2025 in a little bit. But you could see that through 2022, in the last 5 years going up to that point, September has been low at an average of 289. All right. So we'll go down, and this the reason I like this article right here, it kind of gives you some suggestions on how to go through it. So some different investment strategies going through the mix of asset classes. All right. So this one, first one right here, is airlines and shipping. That's not something I'm really looking at right now, but this article right here, which is going to be in the description, it's going to show you the strengths, weaknesses, and opportunities to look for in those sectors. So if you look at strengths, for example, the best performing airline stock for the week was EasyJet, which I've never been invested in. But Morgan Stanley looked at the potential for cash returns in many sectors, and the group believes that 8 companies could retire 20% or more of their market cap over the next 2 years. One of the reasons I have not been diving into the travel sector is really because they're still trying to recuperate from the stuff that happened during COVID, and they have not recuperated all of that. And another thing to look at is that the price of gas is up, and when that has a major effect on airlines, and that's just not something that I want to buy right now. According to Bank of America, this is some of the opportunities. So system net sales increased 5.1% year over year, compared to an increase of 8.5% last week. So that's just something to look at. This is Ryanair. Then you look at luxury goods and international markets. Not something really I'm looking at right here, but some opportunities in that sector. Year to date, luxury stocks, as measured by the S&P Global Luxury Index, gained 11%. So that's just something to look at. Let's go down. Now, energy and natural resources is something that you can look at. There's a lot of commodities in here. You have gold, you have silver, you have things like nuclear that are all combined in here. You got oil. That's a lot of things that you need to look at. And then the big thing about this sector here is that it's very politicized. So when you, for example, on CNN, Fox News, whatever your news channel is, one of the things we recently saw was that you have China, Russia, and North Korea all hanging out together with India. This has really big effects. Even though no decisions were made during that time, this has very big effects on the economical system. Now, this is what a lot of you guys are looking at. So Bitcoin and digital assets, and this is some of the strengths, all right? Of the cryptocurrencies tracked by CoinMarketCap, the best performer for the week was Synthex, rising 14.36%. A San Francisco-based technology that seeks to help content creators track and monetize their work in the age of generative AI is bucking a venture capital drought. So another thing to look at, Ether appears stuck into a consolidation delineated by 2 important trend lines, which we'll see in the chart down here below. One drawn from the record high as seen in November 2021, and the other originating from the June lows last year. So basically, this is a good way to track it. This is one of the things that my brother and I have been talking about with day trading, and one thing that day traders look at is they look at these different charts. So here is the spot Ethereum price in US dollars, and you could see that in this chart here, this is the lows in that trend line, and then you see the highs in that trend line, and you can see it's kind of been moving sideways. Traders love this. Traders love when stocks and cryptocurrencies move sideways because it's easier to trade them. When you have them dropping up and down, no matter what asset you're looking at, it makes it very difficult to predict what's going on next. But when it's moving sideways like this, for example, a stock I could give you an example of is AT&T. AT&T was in a trend between $19 and $22 for about 5 years. And during that time, a lot of traders made a lot of money on that stock because it was easy to predict what was going to happen next. There wasn't any big news coming out, and there was also not a lot of things going on. But one thing with Ether that you have to pay attention to is that there's a lot of institutional investors that are moving into Ethereum. A lot of them feel like they missed the boat on Bitcoin. And what's happening is they're starting a lot of funds that are focused on Ethereum. And what is that going to do? It's going to drive more money into them. I would, if I were you guys, I would do some research on some of these funds because they're showing in their white papers exactly how much money they plan to invest in this asset in a certain amount of time. So, for example, Tom Lee has a 5-year time horizon where they said they're going to invest more than a few $1 billion into just specifically Ethereum. And their goal is to become an Ethereum treasury, where their sole purpose is just to hold the Ethereum and make money off of the staking of Ethereum. And the people that are invested in them are going to make those dividends. That's the goal. But you, as an investor, that's something bullish that you know that for a fact, not only are retail investors getting into Ethereum and they like it, they're part of the community, but you also have very important hedge funds that are into Ethereum as well. So, and more importantly than the strengths, if you're putting money in this, you want to know the weaknesses. Of the cryptocurrencies tracked by CoinMarketCap, the worst performer of the week was Gala, down 14.83%. Down here, the U.S. Commodity Futures Trading Commission brought enforcement actions against 3 decentralized finance firms and signaled that more may be coming. The CFTC alleged on Thursday that 3 DEX broke the agency's rules by illegally allowing U.S. customers to trade digital asset derivatives without registering, according to Bloomberg. Now, this is more of an institutional problem. This is not really a problem on cryptocurrencies as a whole. The good thing here is that when bad things are happening, there is an entity, which in this case is the CFTC, the Commodity Futures Trading Commission, that is holding these people accountable. That gives trust to the institutions, and the institutions are willing to throw more money into cryptocurrencies because they see that if something bad happens, there is a body for, again, the CFTC in this case, that is going to hold these bad actors accountable. All right, so that's just a good article to look at. The next one we're going to look at is these different insights. So investment picks for September 2025, a different outlook and strategy. So this report here delivers a sharp, insightful outlook on the stock market for September 2025, zeroing in on the key economic forces, risks, and opportunities set to shape the market environments. By examining recent trends, it sets the stage for what investors can expect in the month ahead. So we'll go down some of the key points here. We're going to talk about September stock market performance. We're going to look at we're not really going to look at the U.S. labor market trends. I'm just trying to give you guys the wave tops. I'm not trying to bore you guys here. But the September stock market performance, an analytical overview. All right, so a review of the stock market's long-term trends reveals September has historically been one of the weakest months for equities. And as you come down here, you look at the chart, you see 2009 through 2024. These 4 months at the bottom kind of reflect what the historical averages have been. And you could see that September is usually down. But one thing I like about this article is that it'll go down and tell you several factors that contribute to that. This is the way it looks comparatively, 1950 through 2020. You can see month by month what everything is. Historical averages for every other month is positive, but for September it's down. But why is that? So let's look at some of the reasons. Reason number 1, seasonal investor behavior following the summer break. Institutional investors and fund managers typically resume active portfolio management. This often triggers portfolio rebalancing that increases selling pressure, especially in sectors perceived as overvalued. So as we go back over here, we can see that July and August kind of have those, highs. So during those times as well, institutional investors, regular retail investors, this is kind of the times they kind of stop looking at the market a little bit and they go and they take their summer vacations. And this is what that number 1 is saying. They come back and they start taking it seriously again. This is one of the big culprits here. And this is true for the entire fourth quarter. End of quarter financial adjustments as September closed the third quarter. Companies frequently update their earnings guidance. Market participants may react negatively. This is a big one too for both retail and institutions. Tax planning and loss harvesting. Investors often engage in tax loss harvesting early in the fourth quarter to offset capital gains. This practice can be prompt the sale of underperforming stocks, exerting downward pressure on stock prices. So let me take a second and talk about what this means right here. So tax loss harvesting essentially means that the IRS allows you to take a certain amount of loss and count that as a deduction on your taxes. For us as regular retail investors, that's a max of 3,000. So for example, if I had two stocks, I was up 50% on Apple stock, for example, but I was down 50% on, let's say, Google. I could take 3,000 of what I'm down in, sell that, even though I'm taking a loss, but that's going to kind of reduce the amount that I owe in capital gains. So that's one of the psychological things to think about there. There's also shifts in consumer spending patterns with the conclusion of summer. You have psychological and market sentiment factors, and you have geopolitical and policy developments in September that frequently host significant central bank meetings, fiscal policy announcements, and geopolitical events such as occurrences. Occurrences tend to heighten market uncertainty and volatility. So those are all big things to look at, and some of the reasons that September is down. If you have any questions about that, leave them in the comments below, and we'll talk about it. And one of the things I wanted to talk about is a company that I really like and I've liked throughout the years. It's Netflix. And they're always kind of they're always innovating. They're always trying to not rest on their laurels, and they're trying to, stay relevant. And one of the ways they're doing it now is they're going to allow users to customize and share clips with each other on mobile. So it's kind of becoming sort of like a social network. So every single one of their users can start sharing stuff with each other. So Netflix announced an update Wednesday to list its Moments feature, which it rolled out last year on mobile. This new update allows viewers to choose a start and end point to save specific clips. Once saved, the clips live in the My Netflix tab for rewatching and sharing. That's the big component I'm keying in on here, according to Netflix. So again, this is adding sort of a social media component. This is an example here. Right here, they're clipping a moment. They're doing it from 53:16 in this show to 53:58. They press save, and now they're not just going to be able to watch it when they don't have Wi-Fi or data. They're also going to be shared with their friends when they do have Wi-Fi and data. So Netflix announced Wednesday a new update to its Moments features, allowing viewers to choose a start and end point on clips to save and share. This feature, which is only available on mobile devices, was first rolled out last year. The new update coincides with the release of the second part of the popular show Wednesday. So this is a big update for them. This is a bullish trend. I want to keep an eye and see, how investors are going to look at this. As of right now, we look at what the stock is doing. It's up 0.13%, $1.62. Nothing major, but this can essentially have the makings of being something major. Another thing that's really big is right now is that Alphabet, their stock popped 9% after Google avoids breakup in antitrust case. So Alphabet will not have to divest its Chrome browser. This was one of the big fears that investors in Google were afraid of, that they would have to sell this or cannibalize it in another way. But they were told today that they will not have to do that. And shares of Alphabet and Apple rose on the news. And I would not be surprised if it continues to rise, because this was something that was holding down Apple, waiting for this antitrust case to end. So again, this is some of the news. Before I let you guys go, just go down here, look at some of the performers today. Again, we have Alphabet Class A and C. This is their two types of stocks. They're both up a lot today, 8%. You have Campbell's Soup, Tesla, and Western Digital that are, thriving the S&P 500. Then we have Dollar Tree, Revity Inc., APA Core, and ConocoPhillips Diamondback. They're the ones holding down the sector. Those are all down 6% to 4% respectively. Then you have NASDAQ. Again, Alphabet's leading those. You have Apple, which we talked about. It's up. And then on the right side, a strange one here to see at the bottom is Starbucks, but you know, with the China thing going on, that's something to be expected. I'm surprised Apple is not feeling that because they're in China as well, but that's something to look at. Down here at the most active, you still have Open Door, which we were talking about on this channel here when it was about, you know, $1.90. We were talking about, you know, getting in on this. And as you can see, it's currently up 5.31 dollars. And it's got a lot of room to run. So just keep an eye on Open Door. This one is not just one that's a meme stock because it's a meme stock. This is one that institutional investors are also invested in because institutional investors see the opportunities in Open Door, especially as the Federal Reserve starts to bring rates down. So that's just something to look at there. But listen, today we talked about a lot. I appreciate you guys. I appreciate you guys sticking with it. I really love you guys a lot. So any questions you guys have, please leave it in the comments below. As always, invest in me and press that like button. Invest in yourself and smash that subscribe button. It costs you nothing. Until next time.